Welcome to Market Call. I'm Morella Fernandez. Andrew Pyle on the show with us today. He is Senior Investment Advisor and Senior Portfolio Manager at CIBC Wood Gundy. He's taking your questions today on North American equities. Here's how to reach us. Call us toll free at 1-855-326-6266. You can also email your questions, marketcall@bnnbloomberg.ca. Andrew, thanks very much for joining us today. We've seen a few record closes on the TSX this month, the last one only yesterday. What do you think is feeding into this?
Well, I think we have a couple of things. Obviously, fundamentals in Canada are starting to look a little bit brighter than what we had thought, or what the market had thought, Morello, 3 months ago when we were heading into this tariff maelstrom. And I also think we're seeing definite signs of a rotation out of U.S. dollar domiciled assets into other currencies, into other asset security classes. And I think Canada is benefiting from that. And being a relatively small share of the global equity space, it doesn't really take a lot to move the needle here in Toronto. So I think both of those things are contributing to give us the performance that we've seen.
Are you focusing on other markets outside of the U.S. to put some money in?
Absolutely. We looked at this coming into 2025, that if this was going to be a different playbook under Trump 2.0, if this was truly going to be a situation where it wasn't just going to be a tit-for-tat tariff war and then rescind them 6 months down the road, deal with some moderating growth, and then get back to square one. If it was going to be something more than that, then we really wanted to look outside of the States, and to that extent, Morello, even outside of North America, and start putting money to work in Europe, start putting money to work in developed Asia and also emerging markets, just to mitigate some of that risk coming into this year. Because
we've seen the tariffs put on, then paused, and extensions given so that there can be some sort of discussion in hopes of getting to an agreement, have you moved at all on your concept of moving outside of North America? Do you feel like some of this might get wrapped up sooner than later instead of lasting a full 4 years?
Yeah, I don't think we want to get caught on a head fake on this. To your point, Morello, this off and on really does not inject a lot of confidence amongst businesses. It doesn't inject a lot of confidence amongst investors. So we're going to maintain the course to look for those opportunities outside of the States. It doesn't mean we're getting out of the States wholesale. But I mean, you just have to look at the number of analysts today that are on the same ship in terms of the U.S. dollar heading lower, that we're not on that ship 6 months ago. And I think that tells you the story that we're going to be in for some troubling times for U.S. domiciled securities, and one that we need to be careful with, and again, look for those opportunities outside.
Let's talk about sectors that you're looking at. Of course, tech sectors have been big in the U.S. and in Canada to a certain extent. What are you looking at as far as investability over the longer term?
Well, we still like tech, and I think we're in that second or third or fourth phase, whatever one you want to call it. With respect to AI, now we're looking at monetization of AI in terms of companies and end users. And I think where it's we'll get Nvidia earnings later. It's not that Nvidia is not going to be a driving force in this market going forward, but I think you're seeing that spreading out, and I think that's where the opportunities will be, whether it's in the e-commerce, Morello, or in other areas where we're now starting to implement AI in those end-use situations. So that's an area that we think offers some opportunity. We still like energy. I think the Canadian energy patch right now has got a shot in the arm from whether it's pipeline development, diversifying, energy export markets. I think all of those things play well for the energy sector. Again, sticking with those larger cap names that have the balance sheet, Morello, and the ability to weather any types of storms that we head through.
Got it. All right, Andrew, we're going to line up some phone calls for you and some emailed questions. Andrew Pyle of CIBC Wood Gundy. He's taking questions today on North American equities. We're back in a moment. Here's how to reach us. Welcome back. Let's start with an email from Ash, who says, hi, what is your opinion on Vistra Energy core? We'll turn that over to Andrew as we pull up the chart for that. Vistra Energy.
Yeah, great question. So a U.S. power play that has really outperformed its peers, more than double, Morello, in terms of its stock performance year to date. A lot of that coming from acquisitions in the States, and feeding off that theme that we've been seeing now develop for months and quarters, is that we build out AIs, we build out these data centers, that appetite, that demand for energy is only going to grow. And Vistra is one of those companies that's really capitalizing on that. The only thing I would say, Ash, in this talk is, after you acquire as many companies as they have, which I think is a positive, there's always a challenge of integration. And so that's something to look out for in this stock, is how successfully these operations are integrated into the whole. But the company has done extremely well in capturing that demand.
How big of a player is Vistra?
I mean, they're not a mega cap stock, Marilla, at the end of the day, but you don't have to be, I don't think, in the States. I think they've got a really nice slice of the pie south of the border. Now, not to put water on this, but, we've had a number of guests and analysts talk about, what if we've overplayed this demand aspect of AI? What if we don't require the energy that we think we require? Do we reverse a lot of these themes and reverse a lot of these moves in the stocks? Entirely possible. But again, I think in this position that this company has found itself in, it's going to see fantastic cash flow generation going forward.
Got it. Let's go to the phone lines. Anne is on the line from Scarborough, Ontario. Hi, Anne.
Hi, good afternoon. Andrew, do you think that Texas Instruments or Microchip will give Nvidia a run for its money? I know Nvidia is giving its results after the close. Thank you.
Thanks for the question, Anne. So Texas Instruments, what are they up to lately?
Well, I mean, they're obviously into chips, and I think they're trying to look for these opportunities. We've talked about this with respect to Broadcom. Clearly you are not going to topple Nvidia from the throne of which it finds itself with respect to AI and chipset power that. And as you think you can do that, they come out with a new version of the chip that is even better. So I think a lot of companies now are looking for niche areas where they can develop demand or meet demand without going head to head with Nvidia on its mainstream chips. And I think Texas is trying to do that. I'm not sure how successful they'll be. I think there'll be better plays out there. Again, I've mentioned Broadcom. Stock has come off a little bit in recent days. We'll see. And again, the one thing to keep in mind with Nvidia results coming out is it is the bellwether in terms of how it sees demand going forward. Any weakening or any sign of negativity in these comments tonight is not going to play well for, I would argue, anyone really in this arena.
Got it. Okay, we are, of course, going to watch that on the close tonight. Let's go back to the phone lines. Gordon is on the line from Victoria, BC. Hi, Gordon.
Good morning. Premium Brands. I've had this company for 12 years. Every single quarter, they set new records. Every single year, I've had a double-digit dividend increase. I've been watching this company go from $200 million in sales to $7 billion, and the CEO operates on 5-year plans, and we're in year 2, and he's taken us to $10 billion, and he's going to do it because he's done it in the past. They have excess capacity they've purchased in the United States. They're bringing new product lines in right now. Just a great company to just hold. What do you think?
Okay, so let's take a look at Premium Brands. Andrew, I just want to call your attention to the fact that it did fall off last fall, I guess, if we can pull up a chart that's closer maybe the 1 year. And you'll see that fall off sort of the end of last year. It's kind of climbed back, but was there any reason for that you recall?
It's climbed back, I think, just because I think investors have looked at valuations on this stock to the viewer's point. I mean, it is a good stock, I think, from a whole point of view. It has been a little frustrating, I would say, this year in terms of holding this stock. It really hasn't gone anywhere at all. I think the growth plans that the company has are realistic. I think it will execute on them. And I think the stock does have some upside momentum. But this is, again, a very difficult space to be in right now. I mean, whether we're talking about tariff uncertainty, trade uncertainty, and just pure and simple, what is the economic outlook for North America going forward? And how does that impact a company like Premium Brands? Obviously, it does have an impact at the end of the day. But I think the company's in good shape. I think it's just been somewhat frustrating not to see that growth being pushed through. Question then comes back to the dividend. As we've seen in many cases, sustainability of the dividend. Can we grow that dividend over the next 5 years? If we can, then I think the stock is in good position and again would be a hold.
Okay, so Gordon, I hope that helps you out for Premium Brands. Let's go back to the phone lines. John's on the line. He's got a question today. He's calling from London, Ontario. Hi, John.
Hi, Marilla. Hello, Andrew. As you mentioned, Nvidia reports today, and the bellwether is going to ring. the report revenue, and this channel does a great job covering it. You see the revenue is a big beat. The stock price is going up after hours. Earnings are a big beat. Stock price goes up. And then Jensen comes on, and he opens his mouth, and then the stock price comes down. Where do you think, when the dust settles tomorrow morning, where do you think Nvidia will be? Thanks very much.
Thanks for the question.
Yeah, I've got a coin as well that we can flip right now and figure out where it's going to be. I think the interesting thing about this report today, compared to previous reports, even though there is some commonality in how we see these reports develop in the after-hours markets, I would argue the bar is probably being set a little lower on this result than perhaps in previous quarters, and for very good reason. We're now in the thick of the uncertainty with respect to where the economy is going, the impact of Trump's policies over the next 6 months. So, we've seen these whispers, these cautionary whispers coming out, which I think the analyst community has picked up on and perhaps looking for maybe some inkling of negativity in the comments tonight. Again, we don't know. If that were the case and we don't actually see something as bad as perhaps what we think, the stock could actually see a nice little pop. We've seen it consolidate after a nice rebound from April. It really comes down to where's the market, where's that bar been truly set from a whisper point of view, and again, what comes out of Chanson's mouth at the end of the day.
Just let me ask you, Andrew, as you mentioned, people are really going to be very sensitive towards any amount of weakness forward looking for this company. We know they're going to take a hit from the chips that they can't send to China under Donald Trump. It's a $5 billion plus hit. Do you feel like any whiff of negative news or downturn for them is going to play out, a lot bigger than it looks?
I mean, it could, Marilla, but I mean, it really depends on where the street thinks it's going to come in. Personally, I think the street's prepared for some bad news tonight. If it gets the bad news and nothing but, or nothing worse, doesn't mean the market's going to crater on this stock. I mean, there's going to be this nagging concern that, have we priced too much into this? Have we priced too much demand? What does the competition look going forward? Is there, in fact, a viable, more cost-effective route to chips and to these types of chips coming out of other countries like China? And if so, then investors are going to be prepared to pull back. But I don't think it's over yet for the stock. It's still a leader in the market. And despite wobbles that you may get tonight after the earnings results, or in fact, the wobbles that we saw in April, the stock is still, a solid company going forward.
Got it. All right. We're going to be back with Andrew Pyle. He is with CIBC Wood Gundy. He's taking your questions on North American equities. We're back in a moment. Welcome back, and thanks for joining us. Andrew Pyle is with us here to take your questions today on North American equities. Let's go to the phone lines. Greg's on the line from Kelowna, BC. Hi, Greg.
Hi, thanks for taking my call. So I own Ivanhoe and Agnico Eagle, and I'm looking at adding another Canadian mining company. So I'm thinking of HudBay Minerals, and my question specifically is it immune from sort of foreign country risk, as I've watched sort of the goings-on recently of Ivanhoe? I know that HudBay earlier in the year has really had some kind of significant swings. A few days it had some pretty substantial drops. I'm just wondering what your thoughts are of HudBay Minerals, again, with its copper and gold exposure. And lastly, if you're permitted to comment, K92, I don't know if it's in that same stream. I'm also just wondering if it plays in that same market as HudBay with both copper and gold. So that's my question. I'll appreciate your answer.
Thanks, Greg. Okay, so Andrew, where does HudBay operate? Do they have a lot of international exposure that could be difficult for them?
Well, they do, and the question is whether it will be difficult for them. It depends on where they are. And I think the lessons that we've learned in the past is, when companies operate in countries that at the time look stable, do not look problematic from a risk point of view, and then all of a sudden 10 years goes by and we're dealing with either a different regime or a different geopolitical setup, that can change. And I would say that's the case with every company that plays in the international markets, including HudBay. Some less sensitive, some more sensitive. So they're clearly not immune at all. I think that would be an incorrect way of looking at it. The stock does trade more volatile relative to some of its peers. But I would argue it's still in the metals that are going to deliver growth going forward, and that being gold and that being copper. Gold, obviously, in terms of political uncertainty that we see around the world, we still see demand for gold getting stronger as we move forward through this year. I do not see policy uncertainty abating at any point. And on the copper side, again, we're still dealing with a build out in terms of grid infrastructure with respect to electrical demand, electrical delivery. So I think in those two metals, the company is well poised. I think you do have to have a stomach for a little bit more volatility with a company like this. But ultimately, I think the long-term view on the stock is still positive.
Got it. All right, Andrew, thanks for that. Let's move on to another caller. Corey's on the line. He's calling today from Vancouver. Hi, Corey.
Hello.
Hi.
Thank you very much for taking my call.
What's your question?
I purchased Banco Santander recently, and it has posted a new high fairly rapidly. And I'm looking at its chart over the last 20 years, and I'm interested in knowing if there's going to be a return to its previous high. Thank you, and I'll hang up.
Thanks for the question today. All right, so let's pull up, or we have Banco Santander. Can you tell me a little bit about them?
Well, a major European bank. This is not a small bank. It is one of the larger banks in Europe. Also has an international footprint. And the interesting thing about behind this bank is, as well as any others that we would pull up on the chart today, Morello, is just the turnaround in this space over the last several months. Again, if we had talked about this on the show 6 months, a year ago, about opportunities in the European space, opportunities with respect to European banks, should we be moving money into those types of areas? We probably would have said, it's not the time. Things look very fragile in Europe. Growth prospects are not strong. Real estate markets are still vulnerable. And yet here we are with a sea change in sentiment with respect to investing in Europe, basically speaking, but also looking for strength in the economies of Europe coming out of this tumultuous period in terms of policy. And banks are going to, they're going to reap the rewards of that. If I increase business spending in Europe, if I increase demand, if I bolster economic growth, we're going to see the banks at the end of the day benefit. And we've definitely seen that. Now, to the listener's question, are we going to go back to the recent highs? Hard to say. This stock has moved quite quickly. And if you listen to some of the other analysts out there, Morello, a lot of the gains in Europe, it's not that they're not valid. It's just that we've come a long way in a very, very short period of time. So I would suspect that we will probably see a little bit of a pullback as we move forward on stocks like this. But that's not to say that these companies aren't solid going forward. I think we're probably just a little bit rich at this point in time.
Got it. Okay. We hope that helps her. Let's move on to John from Waterloo, Ontario. Hi, John.
Hey, good afternoon. I'm interested in your take on Senovas. Is it a good entry point, or is there still some downward pressure on the stock to wait a bit before I purchase it?
Okay, thank you for the question. Let's take a look at Senovas, which is at 1864 today, Andrew.
Yeah, good question. Like I said at the beginning of the show, Merrill, we like the energy sector right now. We think stocks that have seen a pullback in this area, I think, are offering opportunities for investors from a long-term point of view. This stock definitely has come off sharply. Energy prices have not been friendly for a lot of these names, and I think this is one of them. But we would look to a company like this to offer decent long-term prospects. I do think energy rebounds. I don't think we're going to see oil prices plummet much through $60 or $50. I think even if we get moderating economic growth, we're seeing demand shift. We're seeing demand for energy improve in other parts of the world. So I wouldn't be concerned about the pullback in this stock. I do think it's an opportunity, again, if we're setting a long-term time horizon on that type of investment.
Got it. Okay, we are going to take a quick break. We're lining up Andrew's past picks for when we come back. Stay tuned for that. Welcome back. Andrew Pyle is with us. We are going to go through his past picks at this time. When he was here was April 1st of 2024, so a little over a year ago. And at the time, his first pick was Adobe. Adobe came in at $502.09 last year at this time, American. It dropped to $416.29, so a 17% return drop and a 17% total return drop. What has happened here with this software technology company?
Well, basically, expectations back then was this was one of those companies. When we look at AI integration, again, getting back to our earlier comments, Morel, monetization of AI and delivering it to the end user, we really thought Adobe was well positioned to deliver on that. They had several pipeline products, including Firefly, that they should have been able to execute on better. And in hindsight, the company really has not executed to the extent that analysts thought they would. We're also seeing increased competition in this space. So when we start talking about graphical uses of AI, there's just simply more players than there were 12 months ago. And we're seeing Adobe struggling, I think, to maintain that market share. Again, I think the company's still solid. It's just really has not executed on what was, I think, a layup for this company in terms of being at the leading edge of integrating AI that we, most of us thought 12 months ago. We still own the stock in our portfolio. We have not exited the stock, but it has been a bit of a disappointing run.
Adobe used to be, and still is, a very well-known name. People were attracted to Adobe. It was fairly easy to use. Who have they lost out to? Who has sort of come into the market that has been that competition for them?
Well, I mean, you can look at names like Microsoft if you want to deal with larger companies that, again, are having, I think, huge success in developing tools for the end user based on AI. I think Microsoft clearly has come out. Most people think of Adobe as, PDF files, having an Adobe reader. The company was making inroads in terms of, subscriptions to their products. And, I think for a lot of people, it's kind of turned them off. So we've seen reduced demand in that space where they can find alternative ways to deal in electronic copy. There are users, but we also see smaller companies too, Morel. It's not just the larger companies that are kind of biting away at their market share. And I think, as with a lot of other companies in the space, they're going to have to continually roll out products that are ahead of the game, ahead of the competition to maintain that market space.
Got it. Okay, let's get to your next past pick, Brookfield Infrastructure Partners. At the time, it was 41.26, and it is now at 45.62, so an 11% upside return, 16% total return over the last year and change. Do you still like Brookfield?
We like the company. We came out of Brookfield Infrastructure a number of months ago, basically after the election, coming out of December, where we really thought there were going to be challenges to the economic environment globally from tariff policies, which ultimately came. So we exited the stock early part of this year. We have not come back into Brookfield. Stock has had a nice little run in the last few weeks, basically riding on the coattails of the market recovery, general market recovery. I do think the company is well positioned, and especially when we look at clean energy projects globally. But the environment right now for us, just not there yet to re-enter this name.
Got it. Okay, let's get to your third pick from last year, Vanguard, the emerging markets ETF. Do you remember at the time what you liked about it?
We thought it was time to come back into China. We thought prospects for China were going to improve. We thought there had been a lot of negativity priced into the market with respect to the Chinese economy. And again, looking at how this economy was going to deal with the potential for a Trump 2.0. And it comes back to what you and I talked about at the beginning of the show, and that is really diversifying the portfolio, trying to mitigate some of the exposure in the States if we were to see a negative drawdown in that segment of the world, and looking at other areas. And we really thought emerging markets would do well. India, for example, has done tremendously well in terms of equity performance. And even elsewhere, if we look at the likes of Brazil, which I argue today is benefiting from the trade tensions between China and the States, because China, guess what, is going to redirect a lot of its purchases to Brazil, a lot of its infrastructure spend. So we still like this area. We add to it now, Morel, and I think emerging markets is back in vogue.
Got it. All right, Andrew, we are going to line up some more phone calls and emails. Andrew Pyle of CIBC Wood Gundy taking your questions on North American equities. We're back in a moment. Welcome back to Market Call. Let's go to the phone lines. Charlie is on the line from Montreal today. Hi, Charlie.
Hi, thank you for taking my call. I'm calling about Teck Resources. Several guests on the show have said they're bullish on copper. I do agree. I took a small position in Teck Resources. It hasn't done very well. I'm currently under by about 6%. Do you think I should buy more to average down? I would appreciate your thoughts. Thank you.
Thanks for the question. So it did take a steep drop off when everybody else did in March, sort of April of this year. At the time, it went down to about 29. It's popped back up to about 51 is what we have. So I might be off on that timeline because I've a different one here. But it's at 51, 53 and down a little bit today. Andrew, what's your forward look on Teck?
We actually like Teck. I think, the stock obviously did get hit in April, but I mean, keep in mind, two other things were at play here. One was kind of a more cyclical pricing in by the market of weaker economic growth going forward, especially over confusion over policy coming out of the States. And just, the feel that, we were heading into an environment where we'd have a higher probability of recession. That's clearly not going to be good for base metals. And lastly, I think we've seen an appetite shift amongst investors towards precious metals, obviously gold, in place of base metals. Having said all that, I think, again, it's that pause in a lot of the things that were really going to drive copper going forward. One of those being, EV expansion, which will continue. We've just hit the pause button because of current policies coming out of the White House. And the necessity to build out electrical grids globally, whether North America or elsewhere, all will benefit companies that have a strong position in that. And it also picks up that demand factor that I think will be at play with respect to zinc. So I think the company's well positioned. I think a lot of bad news was priced into this stock, and I think you're starting to see analysts now get on board. If you look at the latest tally, we've got quite a few buy estimates out there by the analyst community. And, I think longer term, it's a good play.
Got it. Okay, and I just want to make a correction here. It dropped to 41 during that dip, and now back up to 51. Charlie, I hope that helps you out. Let's move on to Paul from Orangeville, Ontario. Hi, Paul.
Yes, Tooline Oil. It's currently 64, and I bought it around 70. Will it ever go back up to around, it used to be a 90?
Okay, so let's turn that over to Andrew. What's your take on Tooline Oil? I know we've talked about energy. You like the comeback for energy, generally speaking. Can you speak a little more specifically to Tooline Oil?
Yeah, this is a stock that we actually own in the portfolio. One of the reasons for getting into Tooline in the beginning was basically the fact of its heavier weighting towards nat gas. Our view has been and continues to be today that nat gas is going to be kind of the preferred energy play going forward, just because we do see increased demand growth for LNG, and we think Tooline is well poised to capture the benefits from that. So we still have the stock in our portfolio. We have seen the stock come back. Obviously, as we've talked about before on the show, Marilla, we saw a drawdown in pretty much everything back in April, but we are seeing that creeping back. And it comes back to that thesis in terms of, electrical generation going forward is going to continue globally to shift away from coal to cleaner forms of energy, and that would include nat gas. And again, this is one of the reasons why we liked the company back then and still like it today.
Got it. All right, Paul, I hope that helps you out. We're going to go back to the phone lines. Thomas is on the line. He's calling from Vancouver today. Hi, Thomas.
Hi. First of all, fantastic show. Andrew, I'd like your opinion on Superior Plus. I purchased it at 15. I was happy with my 11% dividend, but now, the dividend was cut 6 months ago to 2.5%. I'd like your opinion on, I'm a long hold, obviously, your opinion on Superior Plus going forward. Thank you.
Okay, thanks for the question. Superior Plus, propane, potassium products. Andrew?
Yeah, great question. And so this was a company, to the viewer's point, that was a dividend darling for a lot of portfolios, and we had Superior in our portfolio, years back for that very purpose, to generate income in a portfolio. And of course, the company, ran into a wall with respect to analysts and traders' views on how sustainable was that dividend. Of course, we saw the dividend cut. And that's really was a game changer for us, because that created a company now that offered a value position in the portfolio versus income. And it's not to say there's no income on this, but that dividend cut I think was the right decision, right time for this company. And I think you're seeing the analyst community now, Morello, starting to reward that decision several months after the fact, because the company was always well poised, whether it was propane, whether it was compressed natural gas in North America, has a very good footprint. Getting again back to that energy demand thesis, this is one of those companies that will benefit from that. So this is a company that we still have in the portfolio. We put it in last year after that dividend cut, after we saw prices get to a point that we thought were disproportionately low, and we still think it's a good value play going forward.
Okay, let's move to the phone lines for Bob. Bob's on the line from Toronto today with this question. Hi, Bob.
Hi, thanks for taking my call. Andrew, your thoughts on Nutrien. It was, I think, down to 60, and now it's over 80, I believe. And do you have a price target, and do you own the stock?
Okay, so Andrew, Nutrien, I'm wondering sort of where are you on agriculture, generally speaking, and Nutrien, stock has moved up sort of quite a bit. What are they doing here?
Well, this is a stock not too long ago that was seen as being quite risky given what we expected to see from Trump in terms of tariffs. So the placing of tariffs on, for example, potash coming across from the States, or sorry, from Canada into the States, was definitely not going to be a positive for Nutrien. And we did see the stock pull back. And of course, now that we're kind of breathing a sigh of relief with respect to tariffs, although I would say that that's probably not something that could be or will be sustainable, we've seen the stock come back. So that's been a positive. The other thing to look at with respect to Nutrien is something that we're talking about more generally speaking, and that is, expansion of markets outside of the States, where we will see continued growth in agriculture, continued growth in demand for fertilizers, including potash, and potash or Nutrien being, well positioned in that market. So we think longer term, as we always have, that Nutrien will do well from that strength in agricultural growth. But, just a warning, this is going to be choppy because we don't think we're out of the woods yet with respect to tariffs and trade policy gyrations coming out of the States. And so, you just have to be a little bit tolerant of some gyrations in this stock going forward because, as we know, this is a more of a speculative play whenever we get into fertilizer plays.
Got it. Okay, we are going to take another quick break. Andrew Pyle sticking around to take your questions. We're back in a moment. Welcome back. Let's get to Kevin, who's been holding on the line from Manchester, Ontario today. Hi, Kevin.
Hello. Hi, Andrew. I'm just wondering if you can give me your thoughts on Fairfax Financial. Obviously, it's had a great run. I just want to know what your thoughts are for the next, let's say, 2 to 3 years. Thanks.
Thanks for the question. Let's pull up Fairfax. There we go. 2,349 at this point. Andrew?
Yeah, the company's done extremely well, and we think probably will continue to do well. In the diversified financial space, and we start getting away from the banks and talking more about insurance, life insurance, and getting into property and casualty insurance, which is Fairfax, we do think this company is well positioned. It does well also in an environment. If one of the themes that we're looking at now is we're in an environment of higher long-term yields. How long that lasts, we don't know, or how much further it goes, we don't know. But in those environments, a lot of companies will suffer. Companies that have tremendous levels of debt, companies with assets on the balance sheet where they're generating better income from those longer duration products will tend to do better. So Fairfax would be one of those companies in the latter bucket of companies that are more insulated. And I think you've seen a movement by investors into this space for that very reason, because we've been talking about this for weeks now, that this is not the yield space that we thought we'd be in this time of the year, going back to last November, December, when we were putting our projections out. And so you need to find those companies that will insulate you from that.
Okay, let's go back to the phone lines. And Dave, who's calling from St. John's today. Hi, Dave.
Hi, Andrew. I'm interested in the quantum computing space, and I'm wondering, is it too early to have a look at it? And if you might have a top pick, suppose it was D-Wave or IonQ or something else. Thank you very much.
Thanks for the question.
Yeah, that's a great question, Dave. I personally think this is the next phase. We've been living in this AI, I won't call it mania, but we've been living in this AI growth patch for a while now. And I'm not saying that that's going to end, but I think there's going to be a next leg to this. And I do think quantum is it. answering a lot of the problems that we deal with in the world, from medical, the ability to speed up analysis in the medical field, cybersecurity, having quantum computing kind of meet a challenge there that I don't think AI really does. So I actually think this space is the next space. The problem is there's not a lot of developed companies in the space. We're looking at an industry that is quite immature, but sometimes, if you've got a longer time horizon, those are where you find opportunities for decent long-term growth going forward. And having said all that, even if we look at some of the larger companies like IBM, for example, which is now getting more and more into quantum, because one thing we know about quantum, not to be too long-winded on this, Morello, it's not like AI. This is a platform that requires a lot of space. So quantum requires a lot of footprint space. Maybe it helps office realty issues, I don't know. But IBM now is starting to look more prominent in that space.
Got it. Okay, let's move back to the phone lines, get a couple more callers in. Mark is on the line from Ottawa today. Hi, Mark.
Hi. Thank you for taking my call. Great show. What is your long-term outlook on Fizer, and with the dividend being more than 7%, do you think it's sustainable? Thank you.
Okay, so some of these pharmaceutical companies, of course, have taken hits post-COVID. They are all developing different drugs. But what's your take on Fizer? What has it got in the pipe?
Well, once upon a time, we really liked Fizer. We thought its oncology pipeline was rock solid. We thought it had fantastic long-term prospects. We viewed the dividend as sustainable, quote unquote, safe. And, I think, the company has been beaten up in terms of its lack of ability to bring forth a weight loss solution or weight loss drug, unlike some of its competitors. I've argued on the show before, Morello, that may or may not be a realistic critique of this stock longer term, but it is right now. And so I think it's an analyst community right now that's just kind of waiting. We've seen the drawdown. We've seen the stock consolidate. We're not seeing a massive amount of conviction behind the stock. We had come out of Fizer last year, and we're not yet ready to come back in. I think if the pipeline on the oncology side improves, I think that would be a reason to get back in. But, solid company, I think it's just where it finds itself right now, post-pandemic, after the vaccines, and not delivering on what is really kind of the key focus right now, and that is on weight loss therapy.
Got it. Okay, let's move on to Peter from Vancouver. He might be our last question. We'll double check. But Peter, what's your question?
Thank you. Mr. Andrew Pyle, whom I always have admired as a great economist and now a portfolio manager. Please, may I have your expert opinion on Google, the cheapest of the Magnificent Seven and the laggard? Shall I buy here now? Your expert opinion, please. Thank you, Mr. Pyle.
Thanks for the question. Okay, let's take a look at Alphabet, of course, facing a couple of different headwinds. Andrew, as you know, some of them are legal problems in the U.S.
Legal problems in the U.S. and up until recently, legal problems also in India, although the problems in India seem to be resolving themselves. So I would say that's a positive. I think the agreements that we're seeing between Alphabet and Anthropic on the AI front, I think those are positive for this company. I think this company is going to do well going forward. I think it's well positioned. It's one of those companies that's figured it out in terms of how to monetize AI for the end user. And yes, I can flip that on its head, Morello, and say, but doesn't AI also represent a competitive challenge to Alphabet in terms of search? Yes, it does. But I think at the end of the day, this is a company that will innovate going forward. So we like the company. We do have it in our portfolio. And as a long-term play, I think it will continue to deliver results, albeit with these moments that we get volatility or increased spikes in volatility.
Got it. All right. We hope that helps Peter out. Let's take a quick break. When we come back, Andrew's going to share his new top picks. Back in a moment. Time now for Andrew's new top picks. Let's start with Kushtar, ATD on the TSX. Kushtar is deeply involved in trying to get some 7-Eleven holdings from the Japanese owner. This has been a long and ongoing process. Japan seems resistant to it, the company there. What is your take, Andrew, on whether this company, Kushtar out of Quebec, is going to get something out of it? And how long could it take? And is this why you're looking at the stock?
Yeah, it's been an interesting year. I mean, the company is well positioned. It's got a nice footprint, in the States and globally in Canada. And I think, it comes down to this deal. I think recently in the last few weeks, we've seen some more positive rumblings with respect to potentially getting an agreement done. Analyst community is still net positive on the stock, but, not quite what I would call convicted. We think the company eventually comes through this, and I do think we get that agreement. And again, that's a speculative call on my part, but I do think the company does well. I think Japan is open for business, so to speak, in this kind of new world that we find ourselves. I think that's an advantage for Kushtar. But again, I think in the coming weeks, hopefully, we'll get some certainty behind that. Stock has done well in the last little while, and I think we can start to build a base here. It's not to say we're going to get back to where we were last year, but I do think we can set a constructive base here, start to see a trend line starting to form.
Got it. Okay, let's get to your next pick, which is Suncor Energy. And we've talked about energy stocks a lot in the past hour. You've got your eye on Suncor more specifically. Can you give me sort of the broader strokes as to why?
Yeah, I mean, prior to a few weeks ago, I think this would have been a company that we simply would have looked at as being negatively impacted by weaker oil prices, a moderation in economic growth, potential recession. There wouldn't really be a lot of positives to talk about that or offsets. But now we're seeing better pricing on crude products in Western Canada. I think that's a bit of a game changer for a stock like this. Size of the balance sheet, I think, is another factor that we look at because, again, we want companies that can withstand shocks. And I think the fact that we're now starting to see realistic moves by Canada towards opening other export markets for its energy, I think ultimately, benefits most of the companies in the patch, but I think it also benefits Suncor. Stock, has been trading at extremely low valuations. We think this is probably an opportunity to start picking away from a long-term point of view.
Okay, let's get to your third pick, which is Shopify, which has sort of been going up and down for a little while. Let's take a look at Shopify right now, if you don't mind, because it's, good company. It's got a lot of reach here. It's done really well. You think there's still more room for Shopify to grow?
I do think so. I think, from the surface, we talk about Shopify and think about, well, what is consumer demand looking like? Are we entering a period of moderation where this is going to impact consumer spending and therefore it's going to impact Shopify? But again, two things on this, Merrill. One, again, the company is in that group of companies that we look at that has really done a fine job in utilizing AI to its benefit and becoming more efficient. In terms of the amount of staff required to execute in certain operations. This is a company that really has made strides in looking at the ability to use AI to do that. The other thing to keep in mind is that, two of its bigger channels, being cosmetics and clothing, are probably two of the channels, if we think about the impact of trade volatility and tariffs, those two segments, it's a little easier for companies in those spaces to rotate supply chains, and I think become less impacted or relatively less impacted, which again should give Shopify some insulation.
Okay. I do want to get you on bonds as well tonight. I know it's something you wanted to chat about. What is your take on where bonds are going long term?
Yeah, as we've seen in the last several weeks, the long end of the bond market in many countries has really pushed beyond where we thought we would have been this time of the year. We are looking at a credible fiscal threat coming out of the States, which is impacting bonds, but we're also seeing increased deficit spending globally. And it's just something for investors to be mindful of, because when we talk about, if we're going to rotate out of stocks, do we think the equity market's a little bit overdone? Do we rotate into bonds? Really, it reinforces that view that we need to be looking more at the short to medium term segments of the curve. The long end, while it's delivering fantastic yields right now, I think investors just need to be a little cautious. Hopefully we cap out soon, but we are getting close to some very what I would call dangerous technical levels on U.S. long bonds that we have to be mindful of.
As you know, they've got the one big beautiful bill. I keep calling it the one big beautiful, but it's a big beautiful bill. What's your forward take on whether that's going to make the situation even worse?
Well, if we get passage of this bill, I think bond investors around the world have been prepped for this. And this is why we've seen the movement that we've seen at the long end of the curve. At the end of the day, the bond market has more clout in response to policy than the equity market. And we've seen that. And I think the market overall really is not in the mood for countries to be running reckless fiscal policies and are prepared to respond to that. We've seen the Moody's downgrade on the States, which albeit was a late, entry to the party,
yeah.
But doesn't mean it's going to be the last, right? And so I think, again, in that space, you just have to be mindful. We've been keeping our long-term exposure very, very small.
Got it. Sorry, we got to wrap it up. We're just running out of time. Yeah.
Yeah, for sure.
Thanks, Andrew. Appreciate you joining us on the program.
Pleasure being here, Marilla. Thanks very much.
Thanks for joining us on Market Call. We'll see you again tomorrow.